Good afternoon, everyone. My name is Michael Halsband. I'm the head of the Insurance Transaction and Regulation Group at the international law firm of McDermott, Will, and Emery. I am thrilled to be here, along with a number of my other partners from our firm, sponsoring OurCrowd for the first time. Delighted to help kick off today's very exciting panel, Power to the People, the FinTech Revolution. FinTech is a topic near and dear to our hearts. I've particularly spent the last 30 years advising clients in the insurance sector, both as a lawyer at McDermott and as an investment banker at Goldman Sachs. People usually groan when I bring up the topic of insurance. But in the past 5 years, the craziest thing has happened in InsurTech. Suddenly, people think insurance is once again the coolest topic of discussion. Lemonade, one of the companies on today's panel, recently completed one of the biggest financings in InsurTech in 2019, solidifying their unicorn status. In a year where overall private equity and VC funding fell slightly, InsurTech bucked that trend. 2019 saw the introduction of at least 5 new InsurTech unicorns. Financings more broadly was up more than 50% year over year from 2018 to 2019. The industry now has, since its inception, if you're keeping track, $16.8 billion capital raised. And the most recent year's numbers include 2017 of $2.2 billion, 2018 $3.2 billion, and in 2019 close to $6 billion. With all these new players in the InsurTech space, the billion-dollar question is, what does it take to survive those early funding rounds? When the pack thins out, who will emerge on top? We tell our clients that some of the most successful InsurTechs we've seen have a few things in common. They attack the historic industry pain points head on. Examples include Oscar, that sought to make health insurance simpler and less bureaucratic. They address a new or underserved segment of the market. Names such as Root Insurance is one of the many InsurTechs going after millennials for car insurance based on how they actually behave on the road. Others, such as Buckle Up, a new entrant, are targeting the gig economy and rideshare. Ability to align themselves with industry incumbents. Apart from the very many well-known VC leaders focused on the space, an equal amount of InsurTech funding is coming from industry incumbents. Names including Munich Re, Allianz, American Family, SCORE, and Axis, just to name a few, are targeted from a strategic perspective with innovative ideas that they can embrace in their operations. And lastly, empathetic technology built around the end user experience. Our client Hippo Insurance, a name very familiar to you here in Israel, is offering homeowners better insurance choice, automating the consumer process and modernizing and improving coverage. We've got a great panel today. I'm going to turn it over right now to Andrew Dix, CEO and founder of Crowded Media Group and publisher of Crowdfund Insider. Everyone give him a hand. Thank you.
You guys got me on? Am I on? All right, excellent. Thank you, Michael. Thank you for that great intro. I'm going to ask my panel people to come up right now. Charlie, Oz, Yael, Guy Kashtan. Come on up. Let's get everybody up. So thank you, everybody, for coming here to the FinTech panel. We'll get started. All right. So, as Michael said, my name is Andrew Dix. I'm the founder and CEO of the Crowded Media Group. We publish Crowdfund Insider, which covers the full stack of FinTech, which includes online lending, online capital formation, blockchain, digital banking, InsurTech as well. And we're actually launching other domains to kind of cover the verticals. So I love this stuff. I'm totally geeked out about FinTech, InsurTech. I love policy and I love regulations. Some people think I have a genetic flaw, and it's very difficult to socialize with me at night because I get boring really quickly. But that's who I am. I'm going to ask each of my panelists to do a quick intro of who they are and the cool stuff that they're doing right now. And we're going to start with one of my favorite InsurTech platforms here, Lemonade.
Hi, everyone. Thanks for coming to this session. Thank you, Andrew. I can totally agree with you that I've become an insurance geek myself. Lemonade is an insurance company powered by AI and behavioral economics and driven by social good. And it was founded by two techies who knew nothing about insurance. And we can safely say that we've all become really lovers of insurance and of regulation. As a fully regulated and licensed company, we comply with state-by-state regulation in the US and EU regulation. So you have a friend in me.
Excellent. We'll party together.
Hi everyone, my name is Guy Kashtan and I'm the co-founder and CEO of Rewire, a neobank for migrants. If you don't know, a neobank is a challenger bank, so a fintech company providing financial services. We focus specifically on underserved migrants who other financial institutions underserved don't provide them with services, and we help them in order to secure a better future for themselves and their families. Thank you.
Hi, I'm Charlie Javice. I'm the founder and CEO of Frank. Our company helps students pay for college, and we do that by connecting them with all of the types of aid available, which includes scholarships, loans, grants, and all the above. We've helped about 400,000 students to date in the past 2 years, and we're very, very proud to support low-income and middle-income families.
Hi, I'm Alon from HoneyBook. We serve small businesses, micro businesses, and one of the big pains that we went after was payments and their ability to accept payments. We do that as part of their booking flow. To this day, we transacted, give or take, $1.3 billion in the past 5 years, and hoping to transact much more in the coming years.
Aren't we all? So we're at a unique point in history right now because of FinTech. And FinTech is really about the digitization of finance. It's really the internet that is disrupting financial services. And while it started small in the past decade, it's really gained momentum. It's going to totally change everything, you know, and you see it happening now, but the creativity that's coming out of countries like Israel, the US, and the UK, and other jurisdictions is absolutely mind-blowing. About every week I meet somebody who has a new idea. I'm like, wow, I would have never thought about that. So today, fortunately, we have 4 of these super creative people that have decided to change the landscape of finance for the better and improve the status quo, which is in my mind, it's just absolutely incredible. But it's also a little bit crazy because finance is incredibly entrenched, it's incredibly regulated, and so I look at these people and I think that each and every one of them is probably a little bit crazy. So we're going to start with you, Charlie. What in the world are you thinking? Why did you decide to do this? Are you a masochist? This is hard stuff. I mean,
I didn't know this was a therapy session.
Tell me.
Oh, man. So I think when you start off, and I probably started my second company out of college, you don't necessarily think, why can't I do something? You just say, oh, this is great. I think I should do it. And it was a personal pain point for me. It was a pain point for many of my friends. So I think there is an emotional connection to what we do, but there's also a level of kind of seeing the framework and thinking from a career perspective of what you really want to accomplish as your first, milestones in your career. And for me, at least a mentor very wisely told me, be a generalist. And so when you think about building a company specifically in kind of the financial technology space, not only do you touch the regulatory frameworks, you really understand how to build a company and interact with customers, which is one of the most important things. And so for me, it was, why not? And I couldn't think of an answer, really, of what better things I could be doing at that point.
You just had a little frustration there, a little bit of anger. You said, screw it, I'm going to change this, right? That was it. Yeah.
I think anger is strong.
All right. I sometimes I have a little bit of anger issues sometimes.
But
okay.
No, I think it's just being able to find something, also the energy and inspiring people and building a team, which is really amazing as an entrepreneur and CEO.
You're saving the world. What about you, Oz? You're saving the world, right? Are you crazy?
Take out your anger.
Yeah. No, Michael, you're the first person who called Charlie little crazy.
Little crazy. Oh, wait a minute.
Sounds
like you have some empirical data on this.
Oh, definitely.
There we go.
So I think the question around why we do whatever we do or why we started is when you there's a moment that's the moment we all tell about, right, and we share with the world. It makes sense, it's simple, but the reality is when you really look back, there's so many moments that created it. And one of the things I actually noticed recently is when I was a kid, my father was a solopreneur. Actually, he's, to this day, the solopreneur, just like all of our members that we serve. And one of the things that I noticed looking back is the mood of our house was as successful as the business was that month.
Okay.
In a good month, it was a good vibe in the house. In a bad month, it wasn't.
It's really hard.
It's really hard. And solopreneurs and small business owners, they take their work home. They don't walk through the door and take their tie off, like fathers of many of my friends and mothers of many of my friends. And a lot of it was because he was doing that work from home. No one was there doing it when he's home. So I think when I think about all the things that drove us to do what we do today, that's probably one of the significant ones.
Yeah, more power to him. I feel his pain because I'm glued in front of my computer 7 days a week, and typically I don't shower regularly, and every now and then I have to take one because I come someplace like this. But other than that, I'm a bit of a lock-in. But Guy, you're doing payments. You're doing digital banking. You're regulated in the UK. Is it in the UK?
We are under regulation of the UK through a partner, yes, but also regulated in Israel and soon in the Netherlands.
Okay, and you've got the e-money regulatory license, which allows you to do a lot of banking stuff. Can you explain that to me, what you're doing right now a little bit more?
So basically, e-money regulation allows us to do all parts of banking except for all the credit solutions. So once a company does both deposits and credit, which means that you put in risk customers' money, this is when you have to be a bank. This is why you see many companies either doing credit or doing deposits. Of course, there's a way around it with third-party solutions, etc. We chose the part of deposits. We help our customers who are migrants, working migrants, to manage their finances. We open for them a European account, manage their local payments, a debit card, everything they need in Europe with a simple online process. This is the first part. Second part, which everyone knows better, is solving all of their money transfer needs, basically, allowing them and their families to receive their salaries in any way they need it, whether it is wallets, cash, bank transfers, etc.
So how are you competing against the traditional brick and mortar banks? In the UK, you have like four big ones, RBS and a couple other ones that people don't like, right? How are you doing that?
So I don't think we are competing with them. We actually see them as partners and not as a potential competition, because the brick and mortar banks, the legacy players...
You're setting a trap for them, I can tell.
No,
right?
no, definitely not.
Bait and switch.
I want to trap them to be my partners.
Okay, all right.
So we view them as partners because they don't view our customer base as customers that they are interested in. And the reason is most migrants consume their financial services in their home countries. So if you go to a large bank in the UK and tell them, I can bring you 1 million migrants to be your banked customers, banks today, in Europe especially, don't make money on deposits. They make money on credit, they make money on mortgages. Right. So for them, customers who only hold money in are not good customers. However, banks in our customers' home countries, like Philippines, China, India, Nigeria, etc., by the way, countries where the interest rate is high, inflation as well, so they make money on deposits. These customers are between 2 and 3 times higher earnings than the average population, so they are high-value customers for them. And what we do is we stand in that gap between our customers who we value and the banks in their home countries value, and we bank them and provide services to them with these banks. So the local banks, until now, have never seen us as competition, and this is because we focus solely on migrants.
Okay, so your target market is the non-banked or underbanked. So you're saving the world. The big banks, they don't have anything to do with this. It's too difficult, too small, but you're using technology to handle that market, right?
Definitely. So when everything you do is for a specific consumer group, then A, you provide them much more value because you develop for them, and B, you're much more efficient in serving them. So I'll give you just a simple example. We limit the activity a customer can do on our platform to what makes sense. So we don't have to worry what happens if a customer sends above a certain limit, etc. So we limit our risk and we limit our costs. However, for the customer, it doesn't matter because this is anyway above the threshold of what he needs to do.
Okay, okay. So because we're talking about the non-bank and underbanked, I want to jump over to you. But I'm going to get to you in a second because I love lemonade. You're special.
We all love
You love
lemonade.
lemonades. So you're saving the world too because you're serving an underserved or non-served market, right?
I would say so. Then again,
Or a punished market. I mean, what is it? Is it a tortured market? This is
just
the
to
United
put this
States.
in context, 90% of all students receive financial aid when they go into undergrad. So it's not this small population. It might be small because probably very few people in this room would have potentially needed financial aid. That being said, it is mass market America. So we are dealing with people who make, $50,000, which is probably your average household in America. Typically, they are underserved because they aren't the most valued customers that banks are going after. That being said, this is a group and very core group of, 100 million Americans that's currently looking or seeking some type of credential to, look at the future of work. So we are working with an underserved group. A lot of the times, banks and traditional financial institutions have no idea how to message to this group, and specifically to women, I would say, who are very much underserved when it comes to financial technology. And the other elements of demographics that are really interesting are minorities, where we serve 40% of them, first-generation Americans, which has kind of that next level. So it's not migrant workers, it's the kids of people who would have been migrant workers. And then you also have a huge element of military and veterans that make up this population too. So it is a very wide and diverse group, and you need to find the standard that everybody needs, which is money for school now.
Well, I have to say that, so I'm not a minority and I'm not female, but I hate my bank. And I mean, I really don't like them. And I don't want to mention any names like KeyBank or Chase, but...
going into one of their branches, it looks like testosterone threw up all over that. So
don't get me started. Oz, you're doing
On
something
that
kind
note.
of you're doing
Testosterone.
something kind of unique here
Yeah.
because you're serving the gig economy and you're providing like vital services to effectively an underserved sector.
So first of all, I have to say, our members would not want to be called gig economy.
Okay.
They see themselves, which is actually really interesting. We learned this only the last couple of years. They call themselves business owners, not gigs, not even freelancers. Although we sometimes use that word. So, and then the second thing I would say is, who goes to that corner bank, right? Like anymore? Why would you go there? And what we are seeing with our members is we are there in like where they communicate with their clients, where they receive their payments. So we have the ability like to collect the payment from their clients and then say, okay, where do you want us to deposit this? But not only that, but we have the ability to look at their future and what they're about to make. So at a time where they would want to go, historically to the bank, say, hey, I need some more capital, I want to invest in my business, the bank will say, great, let's see what do you have in your account. Let's look at your history, your paychecks. They don't have a paycheck. They don't have any consistency, right, in income. And when we look at their profile, we don't look at their history. It doesn't matter, right? We look at their future. We look at the contract they just signed. We know they're about to get $1,000 in 6 months. And we can say, great, you want this money right now? And we can underwrite it probably much better than a bank. And we are just right there in front of them.
Who do you partner with to do your underwriting? Do you partner with a bank?
We do it today.
Okay.
We do it, but we're about to expand it to all of our member base.
Okay.
And we're definitely going to de-risk it a little bit with some partners.
Okay. All right. Cool. All right. So I love InsurTech. And another, financial service I love to hate is traditional insurance. True story, a tree fell on part of my house, and I called the insurance company, and a couple weeks later, they said they wanted to cancel my insurance and I said, well, why? They said, well, they're looking at this as you're doing some remodeling. I'm like, look, man, a fucking tree fell on my house during a storm. You got to be kidding me. And I have some anger issues, and I lost it, and they backed off. But stuff like that, it's agonizing.
It's a broken system.
It's broken.
It's a broken system, and I think what you were asking about the underserved, and Lemonade really started as this kind of alternative to this broken system. We like to think of it in like three different aspects. It's been unspoiled, the insurance industry, this vast market that is in the trillions, just the P&C, just property and casualty in the US alone is in the trillions. It's been unspoiled by innovation. It kind of like ignored every revolution since the Industrial Revolution, while other industries within financial sectors and in general have really kind of advanced. It's also unloved, right? I mean, we can do a survey here and ask how many people really love their insurance company, and I can guess that it's not going to be in high numbers. You don't have to raise your hands. I guess you don't. But it's really one of those unloved, unspoiled systems, and it's also unchanged. So like the way you have to deal with your insurance company through paperwork and humans and phone calls and faxes is something that is kind of not built for the 21st century. And so when Lemonade started, it wanted to kind of fix all of those things. And the only way to do that is to become the insurance company itself. And you cover insurtech, so you see that there's this kind of trend of a lot of insurance tech companies starting up, and they're fixing a lot of the onboarding process, or maybe the UX, UI, so it looks nicer. But Lemonade is unique in the sense that it has become an insurance company, and we do see our competitors as the big guys, the incumbents, the State Farms and the Nationwides and the Liberty Mutuals, because those companies are unspoiled by innovation, are unloved by some, by those that they're serving, maybe not, but those that they're underserved, that they've ignored, renters, for instance, is a great kind of segment of the population in the U.S. that they've largely ignored, and they're unchanged. They grow as more and more agents as they grow, and we grow through automation, through tech. We actually have a really cool metric at Lemonade where we measure our efficiency as a tech company. We call ourselves a tech company doing insurance and not the other way around. We measure how many policies we're selling per human on our team. And I think right now we're at 2,500 policies per human on Lemonade, whereas State Farm and Farmers and the others are at 400 to 1, 500 to 1. And so as we grow, we believe that we can kind of be more efficient and effective, but also deliver a customer experience that won't have you cursing at the phone.
They've got great commercials, though. Not. But so you're doing homeowners and renters insurance now in much of the United States.
For the majority of the United States, homeowners and renters, and in Germany, contents and liability, which is basically the same thing, just a different name. And we just announced last week that we're getting into pet insurance.
Okay, cool on the pet insurance. When are you going to do auto, health, everything, full stack? Is that on your roadmap? Since you're here, I need to know.
Sure. So we're licensed for property and casualty, so we're able to go into a lot of the things that you just said, like auto. Health is its own kind of vertical, especially in the United States. But our vision is universal. We think that people in Beijing and in Boston are equally frustrated with their insurance companies. We feel that the business model around the world is flawed and broken. And so we think that Lemonade, which has used a lot of behavioral economics and tech, has this kind of model that anyone can really grow towards. So we want to expand in geographies, we want to expand in products, and so we do think that we'll go into different verticals, and I just said we just announced pet, so that's the first kind of outside of renters and homeowners. But yes, we want to be able to kind of fulfill the Lemonade customer as they go from a renter to homeowner, and they're going to need life insurance, they're going to need travel insurance, they'll need pet insurance, and kind of give them that whole bundle of products that fulfill their lifestyle in a way that also gives back to society.
So you're treating the global pain of traditional insurance right now, which is...
We think it's a universal pain. We don't think it's an American pain or anything like that. Yeah.
Cool. All right. So scaling is hard in any industry. So in fintech, it's even more hard. So is the regulatory environment one of your biggest hurdles? The regulations in the United States are a disaster. And they're a disaster for those people who aren't from the U.S. because not only do you have to deal with about a dozen federal agencies, depending on the type of financial service you're providing, but you have to deal with 50 states. And some of these people in the different states are Looney Tunes. It's not just at the federal level. You get some crazy people everywhere in the country. United States, we love to do two things. Shoot each other and sue each other. There's a lot of crazy people out there. So is that your single biggest challenge to scaling?
It is a challenge, but we made a decision very early on to become an insurance company, which means that we have to work hand in glove with regulators. And we went to the financial capital of the world, New York, which is known as the toughest regulators in the country. And we said, if we can make it in New York, we can make it kind of anywhere.
There's a song like that,
There
right?
is a song like that. And so we started in New York, whereas other insurtech companies kind of decided to become an agency or a comparison platform. But we decided to take the risk upon ourselves and said, if we can start in New York, we'll kind of roll out to other states. But yes, you're absolutely right. We have to treat the U.S. as 50 different regulators, 51 actually with D.C.
Yep.
And kind of comply with their rates and forms within each regulator. Europe is a bit easier in that sense because you get an EU license and you can just roll out to other countries within Europe, which we plan to do also this year.
Charlie, talk to me. We had a great conversation just before the panel, and we had some similar responses to issues and challenges in the United States. The regulatory environment in the United States, is that one of your biggest challenges? Or maybe it's just the politicians?
All
Or
the
both?
above. I definitely think there's an element because we sit between the Department of Education as well as, kind of financial regulations when it comes to lending as well. So when it comes to higher ed, unfortunately, our government isn't pro-student. It's pro-university, it's pro-lender, which means that a lot of things go wrong when it comes to students' experience. And so while you would think FAFSA completion and college access is the stated goal of the Department of Education, all of the regulatory framework is actually put in place to do the opposite. So they look at us and they go, wow, these are our competitors, let's not help them scale. So it's very interesting to see that interaction. And so we need to work hand in hand with them, whether it's messaging, making sure kind of data transfer is secure, and all of that kind of area with the Department of Ed. Then you have to also interact with the financial part, which, as you said, is regulators from a state-by-state basis, but there's also federal regulation when it comes to the FSA and student lending as a whole. Wow, I want to be on that side, wherever that is.
They were listening to you. That's why they're clapping.
So it's definitely a pain. It's challenging to navigate, and you really need to understand how to speak their language. Then the political environment isn't helping at all, especially with the uncertainty when it comes to student debt forgiveness, free college. And so whenever you get elections, this space is very jumpy, and it kind of freezes all the innovation, which is challenging. That being said, our stance is if we're pro-student and we're really there for students and their benefit, we will find a way to succeed and provide the best products and services for them. And so I think a lot of tech companies have taken that approach, but also embrace compliance from the start, which makes it a lot easier than other companies like Robinhood or other type of fintechs that try and, slap regulation or compliance in its face versus working with them. It typically blows up and does not work well. So,
Guy, you have it easy because you're regulated in the UK. So the UK, right? It's a cakewalk because you have one regulator you have to deal with, maybe two, right?
So just to be entirely open, we are not regulated ourselves in the UK. We're working with a partner
Partners
for that.
regulated, okay.
So I don't want the FCA hearing and saying, I don't see them on my list, etc. But our approach...
They're pretty nice, though.
So yeah, they're pretty
Not like
nice.
the SEC. Boy,
So we are also working with the Dutch National Bank in Amsterdam, and in Europe it's like what you said about New York. If you make it in Amsterdam, you can make it everywhere. Germany as well, by the way. And our approach to working with regulators has always been to go to them rather than hide from them and wait for them to come to you. So every market where we open or work with, whether it is Israel or Europe, we go to the regulators, we tell them what we are doing, what we expect to do, what do they think, get their feedback. But we have the joy of also working with regulations in other countries. So even though we serve migrants in Europe, we end up sending money or financial services in receiving countries. There's some regulations to that. We don't need a license, but you still need to respect regulations of all the countries where you operate in.
Okay, so Oz, you're using regulatory arbitrage to do your, so you really don't have the problem because you've sold that problem to somebody else, right? Yes. So, which is the way that we do that in the United States if you want to quickly do something, because if you want to become a bank, it takes you 2, 3, 4, 5 years. It's really a bit broken. So, shifting gears here right now, AI is hugely important. We saw a presentation earlier today where AI is going to be everywhere, and it's seeping into everything we do every day now as it is. Quickly on down the line, how important will AI be for your business going forward?
Our members are solopreneurs, and anything that we can do and automate for them while keeping it personal, that is another way for them to scale. Our members sell services, which means they sell themselves. They don't sell products. Again, any moment you take off their plate, they can serve more. And the biggest challenge that we solve, which I started with, is how do you balance automation, which all of them want, for the automated response, etc., to a lead, and personalization, brand, the ability to respond to a lead while selling themselves. And, seems like AI is the next big promise to deliver on these.
Tell me, Charlie.
I think we're very much split because with the underserved demographic that we reach, a lot of people want that human interaction because they've never had it. So they go to, any type of social benefits office, that no one wants to talk to them. And so that human connection is to an extent very important. But then the question is, how do you automate the back end internally with your company so that you could actually let humans serve them at scale? So the AI isn't necessarily customer facing because we always want it to feel human, and it builds that element of trust, which is why people give us their tax return data. But it's also an element of just how operational efficiency works internally. But I do think it's a double-edged sword specifically with American consumers because they don't really want to speak to a robot. And at the end of the day,
Especially a bank-based robot.
especially a bank, because you're talking about social security numbers being absorbed by this, and all of the technology needs to be developed internally, and you need to be sitting on a lot of data to develop something that is as good or better than humans. And so you have to be very, very careful when it comes to the uses and applications of where you use that data, leverage it in an important and smart way. And you also need to know at what point in scale as a company do you actually invest in it. Because if you're only processing something to a certain extent, you could do it with a group of 10 humans. If you're going to need thousands of them, then it might be worth the $1 million you put into the technology to develop it. So it's always a trade-off, but most importantly, the reason our company is named Frank is people want to speak to somebody. And it's a human, and it's a name,
nice
and it feels
person, though.
real. I hope so.
Right. Yeah. Tell me.
So I entirely relate with what Charlie said. We see many of our customers, and the first time they open an account, first time they deposit money, they still call us. And you see many other companies on their email saying, don't call us, your reservation is booked, like Booking.com and others. And so customers, especially with their finance set, need that human touch. However, everything else that you do in your backend should and can be automated. And this is where efficiency is coming into play, efficiency that you then share with customers. So they get their services faster, they get their services cheaper, they get them better, etc. So this is where we see AI influencing our ecosystem.
Okay, all right, that's cool.
So I think we were built on AI, and I think when you look at it in terms of where we are at, we're only at the tip of the iceberg. So right now,
Are you talking about overall?
overall,
or
how
Lemonade in general?
Lemonade in general, how
Okay.
it uses its AI. Insurance is numbers, it's statistics, and it's a lot of data collecting as well. And we're still in the law of small numbers. We've been around in operation for 3.5 years, so we're accumulating a lot of data. But as I said, we're up against the state farms who are 104 years old and have been accumulating data for more than a century. But so beyond the back end that I spoke about, the automation, how we do that kind of stuff, 100% of our policies are sold by a robot. And I kind of disagree with both of you, but I do agree in the sense that everybody likes that human touch. People also like getting kind of their insurance policy in 2 minutes by chatting to a bot. She sounds like a human. She's based on a human on our team. And her name is Maya. And she's real, and she's a good friend of mine. And she sells 100% of her policies, meaning there's no human interaction to do that. If someone has a question, a lot of the times she can answer that using AI. We can use NLP to understand what the question is and try to answer it immediately. And post the insurance policy. If someone wants to add their spouse or add an engagement ring, she can do that automatically. So it's not only like a robotic response that gives you an answer, she gives you an answer and she also performs the actual action. So that's delightful, right? People want to get that done. They don't want to have to send in tons of receipts and so forth. Same goes for our claims process. So when you have a claim at Lemonade, you open your Lemonade app, you tap on file a claim, and you speak with Jim, also a real person on our team in New York. And Jim will ask you a couple of questions and run a few algorithms. And around 30% of all claims are paid automatically without any human intervention. Last year,
quickly too. It's like
3
soon.
seconds.
3 seconds.
3 seconds. You answer the questions, you record a video of yourself telling what happened. Jim runs a few algorithms, and if he deems it legitimate, he will send over the money right away. This is around 30% of our claims today, and last year that amounted to $2.5 million that no human kind of touched.
So what about the rest of them? Does it?
And so the rest of them
or?
goes exactly to what you guys said, and that's where I completely agree, is there's going to be claims that Jim can't handle, or not yet. Maybe he's still learning, right? Every claim he gets smarter and smarter. And so claims that Jim can't handle will immediately go to our human team, and our human team's mission is all about empathy. It's all about putting the customer-centric kind of model, and so I think mixing that kind of human empathy, mission-driven focus, telling the people that are claiming, this is money that's going not to us, we already took our flat fee, this is going to a charity that you support, that's how our business model works, is kind of changing the behavior of people like you and I, who were okay with frauding our insurance company in the past. And we can also do a survey here. If anyone has ever kind of embellished a claim, it's okay. It's almost kind of a victimless crime, right? You don't feel bad because you're screwing over your insurance company, and they kind of deserve it.
So I don't do that, but then they treat me poorly then. So then I'm hurt,
right?
You know, and sensitive.
And then you're going to do it again next time. And they know that, and they'll put your premiums up. And so we're trying to get out of this vicious cycle. And we think that bots actually help, do the dirty work and the work that humans can free up and do the empathetic work. You have fire ongoing in your house. We want to send a human team over and help you get out of that. We're not going to send a robot.
Fire ongoing. I think that isn't like a one-time thing. It happens. It's like most. It happens.
It happens.
Okay. All right.
California wildfires and so forth. Yeah.
Okay. So I sent. Did you have something you wanted to add?
Oh, I was just going to say, I think what's very analogous is where's the empathetic part of your product. And so if you look at demographics, I think for some of the bank account first or specifically financial aid, the empathetic point is I'm really scared. I have no idea what I'm doing. I need your help before I even get started versus I need a claim, a fire's happening. So the fire's happening at the front end, but it's really interesting to see how those funnels flip as well.
Okay, so I distributed a couple questions before we got in the panel. One of the questions I asked was, who's the enemy here? And from my point of view, I am the enemy, because even though I think I know what's going on in the world of financial innovations, fintech and insurtech, I still don't change. I'm still using these unnamed banks like KeyBank and Chase to do things that upset me. There's so much friction there. It's such a pain in the butt for me to change all this stuff, to change my insurance company from the one I hate to one maybe I will love for the rest of my life, hopefully. So am I the enemy, or is it something else? What am I missing here? What's that challenge? And we'll start with you, since you're looking pensive down there. I think you have a good answer.
I'm trying to think about what you just said. Actually, there's something interesting that is happening. We were talking about millennials. It seems like millennials, for the first time as a generation, that when that company comes out and says, we are here for 150 years, millennials are like, oh, you're old. We're the new person in town. Oh, great, like, show me what you got. So I think millennials are actually looking at it completely differently.
So you're saying it's because I'm a Gen Xer. I'm screwed.
I don't know what you are, I'm an Xennial. So I was very confused with what you were saying. I was like, I wanted, but I think that's what's going on. So, but let's let the millennial.
Charlie.
What a title.
Share, yeah.
The angry millennial at this point. So one, as Americans and not Israelis, our customers can never be our enemies. So that's just, I know we're in Israel, but an American concept, our customers are not our enemies. So that's first and foremost.
So you're saying it's me. It's not you, it's me, right?
No. So if you're using the product, I can't consider you the enemy, or could be potential customer. I think when it comes to adoption is one thing, but then it's what are the barriers to entry to actually enabling these companies to scale. So I think the first thing is capital in fintech. So I think it's really challenging for incubation models when you look at bank accounts, when you look at lending, as you're trying to collect the data, you can't assume the product is going to be as perfect as somebody who has 100 years of data. So you have to be willing to have long-term capital for that risk reward. And I'm not even quite sure venture capital is necessarily the right kind of type of capital to take you from 0 to 100 years when it comes to fintech, because of the longevity and maturity of what these products need to be able to support it to scale into growth. So I think capital and investors is a type of barrier when it comes to scaling these types of fintech companies. Okay. The second barrier from a regulatory perspective is they aren't very inviting when it comes to conversations. That's starting to change, specifically in California and in DC. But it is very challenging to have a normal conversation without thinking you're going to get a CFPB action or investigation or some type of audit.
Friday afternoon, that's when they come out. Yeah.
Exactly. So it makes it really challenging, and you think twice before engaging, because you don't want to put yourself in that position. So if you're more open to it and can add those conversations together, that would be so helpful to helping a lot of the fintechs get things right from the very beginning in a sandbox type environment. And kind of, I would say, the third area that would be challenging as you scale is from a messaging perspective and consumer education. So it's really challenging from a customer discovery perspective when you're reaching kind of Americans and states everywhere to lump everybody together and to understand what is best for the consumer when you yourself aren't the consumer and everybody's so different. Yeah. And the FCC and messaging around that. And so if there's kind of a better process and understanding that, I think that's also a barrier to getting good products to market and can kill them before they even have the ability to pivot and scale.
All right, excellent. So we're out of time right now. Please, everybody, give a big round of applause to my excellent panelists. Thank you very much. All right, excellent. And now we have two VCs coming up. Josh. All right, so we have Leah and Josh. You know who I am. You may know who these two people are, but I'm going to ask you guys to share. Give me your nickel tour here.
Sure. Hi, everybody. So I'm Leah Cromwell. I'm the principal at UpWest. We're a Silicon Valley and Tel Aviv-based early-stage VC fund. Our focus is pre-seed and seed stage Israeli founders who are innovating at the Israeli-US tech junction.
I'm Josh Liggett. I'm an associate at OurCrowd. I think you know what OurCrowd is.
Hopefully by now you know who OurCrowd is, right? Yeah, so we've got a few minutes here. I have a few questions that will help edify my perspective and what's going on in the world that you inhabit, because you are looking at really cool companies today and you're making determinations of who you're backing. And one of the questions I have today, right now, are valuations, because fintech is hot and sexy, and I'm looking at some of these numbers, and like digital banking is one of them, where everybody thinks they're the new shiny, and they're going to destroy all the big brick and mortar banks. But you're seeing some of these valuations, and to me they seem a little bit maybe extended. Is that polite? So what are you guys seeing out there? What do you think about valuations?
Sure. So I can say for us, especially because we come in only at the pre-seed or seed stage, really what we've seen, you're definitely right. Valuations have absolutely become extended. I like that terminology. What we're seeing for sure, though, is very diplomatic. What we're seeing, though, is really the burgeoning of the pre-seed stage. So for us, what that means is there are a lot of people who are looking to create new fintechs, and for them, they don't feel ready to go and raise that $3.5 million seed round yet, because all they have is an idea. Maybe they have a POC, if that much, but really what they need is a few $100,000 to get things up and moving, and that's kind of where we come in.
That's you.
Yes, that's exactly.
Did we lose it?
Exactly.
Do we have another microphone? Microphone?
Let's see. Nope, this isn't.
Does that one work?
Hello? Hello? Hello?
Thanks, Josh. No? Is this?
You turn it up?
It works? You hear me? Okay.
Okay.
I invest in technology. I guess I'm not good with it though. But
It's not you. It's the
not me.
microphone.
It's the battery.
One,
but
two.
exactly. Okay. But yeah, so we're definitely seeing a lot more room at the pre-seed stage.
Okay. Josh, OurCrowd has talked a lot about, funding early stage more so and not later stage. Tell me.
So not just funding, but there's a lot of stuff that you don't see that we see that we don't necessarily invest in.
It's the magic behind the curtain, right?
Yeah, like little Oz.
Yeah.
You spoke about digital banks. I think there's, this gotten pretty crazy with a lot of the digital banks in terms of valuations. I think the bigger issue isn't just valuations, it's business model and its viability. Because you know what, if you have a company that's, Amazon's valued at over $1 trillion right now, and Microsoft and Apple and Google. I don't think people are fine with that. I mean, okay, maybe some people, not everybody's fine with that, but a lot of people are fine with that. The problem is when you have a company that's sort of, not to pile on, but gets into the WeWork sort of model where there's no path to profitability. You're in this negative unit economic
They
situation.
were broken.
And it's not, honestly, longer conversation is whose fault was it?
Right, okay.
Which is a very, very
Fair
long
enough.
conversation. But the fact is that if you have a company that the metrics and the numbers say, you know what, this valuation is justified, totally fine in the overall market. But the real problem I see is where you have a valuation that is just because of mega funds wanting to write a big check or whatever else it may be.
SoftBank, maybe?
You said it. Or other companies, whatever it may be, just where the metrics don't make sense and writing such a massive, and it's not everything because there's many investments they've done that are good, but that's the issue, that pushing up artificially those valuations is the big issue.
Okay, cool. So another question for me is blockchain a thing? I mean, is this a real thing? We've kind of gone like this. You're the expert.
It's a thing. I mean, there's also, obviously we have to make the differentiation between blockchain and crypto. Someone from, I think we said this last year, and I will repeat it again for everybody. A really good friend of mine from who runs blockchain at Barclays said that investment in the cryptocurrency space is like and the blockchain space is like the internet in the 90s, and the technology is like the internet in the 70s. So I think there's a tremendous amount of needing to develop those technologies, and a lot of the corporations, especially in enterprise blockchain, a lot of those corporations are holding back from going anywhere because they want to wait for the technology to sort out. Once the technology sorts out, which could take another year, 2 years, 3 years, then we can go there. Crypto, God knows, it's Wild West, who knows what's going on there.
Okay.
I would say for us, there definitely was that early wave with blockchain. I think the issue was it was an exciting idea. It was a great buzzword for people. There's a lot of hype. And then there was a lot of flailing.
Yeah.
And I would say the flailing has kind of stopped because a lot of that froth has just left the market. I think there will be a second wave in blockchain, but we're not there yet exactly because of what Josh said about the technology.
Okay, so we don't have a lot of time. I have an opinion on this. I want to share with you guys later. But so where do you see the opportunity now? We just had some InsurTech coolness up here. We also had some interesting fintechs. Where do you see opportunity? Is InsurTech, RegTech, some other type of tech or acronym? What are you looking at?
I'm very excited actually about B2B payments.
Okay.
Specifically that. I would say also really vertical banking. Specifically, we saw HoneyBook up here before. We were actually the first investors in Oz's company back in 2012. But I'm really excited today at the early stages about B2B payments. Right now, the B2B payments market in the US, depending on which research you're looking at, is estimated to be anywhere between 23 to about $26 trillion.
It's kind of small, right?
Yeah, you have to squint, but it's there.
Yeah.
In particular, I really like the mid-market. So the mid-market is roughly 7 trillion out of that pie. And there's a lot happening in that space. Our company, Stamply, they've raised to date about 35 million. They're focused on automating accounts payable. I love what they're doing. We've seen significant growth since they started in 2015.
US or where?
So they're a split team. The CEO is based out in Silicon Valley with the sales, marketing, operations, product over there, but their R&D is based here in Tel Aviv.
Gotcha.
Don't you love fintech where you're like 100 trillion, whatever, the numbers are just awesome.
The numbers are awesome. Every time you start with a T.
Yeah, so looking a little later than what Leah's working on, I like to. There's a guy from one of the investors from Anthemis said like last week that he loves boring fintech, which is my favorite. One of my ideas for the session that we wanted to do for the session is why boring fintech runs the world. Like companies like Fiserv that nobody knows what they are, but they're worth $80 billion, and they, and companies like Adyen and all these other companies, and we can nerd out about Plaid if we want to for about an hour, which most of the people in the world don't understand what data aggregation is and why it's important.
It's block and tackle, yeah.
Yeah, exactly. So I think there's, you've had amazing companies like Rewire, Frank, HoneyBook, Lemonade, serving the underserved populations. I think that's something always in financial services that's going to be a big, big trend, is finding those underserved people and really getting them. Always looking to see if there's more AI coming out. In Israel, at least, there was a bit of a lull around open banking. Like nothing really awesome came out of Israel during that whole trend. Looking to see the next wave, getting more into AI, getting more into big data, it's coming out.
And it's more than just the underserved, it's also the inefficiently served. Your average customer today in any aspect of financial services is inefficiently served. And there's so many opportunities right now to really grow that pie.
Yeah. So I was talking to somebody the other day, and I was saying, well, you're going to go after the big banks. And they're like, well, first we have to go after all these underserved, these non-banked, these underbanked people, because that market is so huge, it's so enormous, because the big banks, they don't care. So fintech can fix that.
And a lot of them, it's sort of what Guy was saying before, is they don't know how to even get them. And that's why Rewire can partner with a bank, because a migrant worker from Nigeria living in Amsterdam can't get an N26 card. So they're not. It's just like the
Can't
bank's
get
like
one in the
they're not
UK
even on
anymore either.
They're not even on the radar. Like they're not. Yeah, they're not. They're not even on the radar. They're not anywhere. So that's what it's more interesting. It's like those people are ripe for the picking if you have a product and a business model that's interesting.
All right, so I'm out of time once again. Please, everybody, give a big round of applause for Josh and Leah. So thank you very much for coming here today.